So again, you guys are brought in from all parts of the country, and you moved to Chicago. That's an adjustment in itself. You know nothing in general about trading. Tell us what it's like those first few months. I mean, it's basically like going to boot camp, so to speak.
In a lot of ways, it was a bit like one of these reality TV shows in the sense that we were all trained for a couple weeks, and then we were given a lot of money at the time. I mean, we were given effectively a $75,000 to $100,000 account for our first month of trading.
Okay.
And then those of us who did pretty well were given somewhere between $500,000 to a couple $1 million.
So in 2 weeks, you were actually live, real trading. It wasn't simulated at all.
No simulation, straight to real trading.
And so what were you taught in that short period? Because most people probably wouldn't take that risk and jump into the game after 2 weeks of learning a new skill. So obviously you had some solid background with the guys that were teaching you. But what kind of things did they teach you right off the bat?
Well, they spent a lot of time focusing on risk of ruin and the idea of trading being a lot like professional gambling, and that there were odds associated with it. That there was we were taught the idea of expectation or expectancy, whereby over the long run we'd be able to make money, but on any given trade we knew we might lose. In fact, we were taught about drawdowns and periods of runs of losses. Most of the information sort of was a precursor to being given the rules of a trading system, or a couple trading systems that were very similar. Both of them were breakout-based systems.
Okay.
So we were given these breakout systems and told that we could kind of trade them and we could modify them as we saw fit, but that the essential thing that we were to do was not to miss a trend. Essentially, that put us in the category of being long-term trend followers.
And so, were you guys? What vehicles were you trading from the get-go? Were you trading commodities? Were you trading futures, forex, stocks, options? What were you trading?
We were trading liquid futures at the time. There were some foreign exchange futures traded, but not as many as you get today. The heating oil and crude oil hadn't been traded when we first started. After about I think somewhere in the first year or second year, we started trading crude oil. Gold, silver. We weren't allowed to trade the grains because there was a position limit that we had to use the combined position limit amongst all of us, and there just wasn't enough in that limit to make it worthwhile.
Okay. So how about S&P? Any S&P futures, or was it all on the oil and some of those areas, the heating oil and gas?
We were given the option of trading S&P futures, but I ended up not trading them. I just didn't like the action of the S&P at that point in time. Okay.
And as far as breakouts and being a trend followers, what time frames were you looking at, and how many breakouts can you have, if you're really trading? Were you trading real short stabs or again, longer term, you're just getting into the trade once and have your stop and you're ready and you're riding it, and how was it set up?
Well, a good trade would be months. I think I was in a sugar trade for 9 months to a year. We might be in and out of the same thing on the same day if it didn't work out.
Okay.
So we had pretty short stops, and we were given the option of either having a real short stop or sort of a medium short stop. I opted for the short version just because it was reported to be more profitable and harder to do.
Okay, so you get into a breakout, and then you were putting on your maximum size based on the book that you had to start with. Or you're putting on your full size right to begin with? I mean, you weren't legging into it at all?
No, we legged into it in 4 chunks. We called them units.
Okay.
And you put in 1 chunk at a certain level, and if the price went up a little bit more, you put on the next chunk. It was essentially based on the average true range, or essentially the daily volatility. If it moved up a half an average true range, we would put on the next unit until we got to maximum 4.
Was it almost a pyramided Monte Carlo? So one time, two time, three time, four time on those four legs, or was it
No,
the same every
it was
time?
it was the same every time.
Okay. So was it often that you got a full position on, and did you only get a full position on when the trade was going your way, long or short?
Yeah, we only got a full position on when it was going our way, and it was very frequent that we had a full position on. I would
Very
say
frequent.
a third to half the time we had a full position on in something.
Okay. And how long would it typically take that position to get to that full size? I mean, was it a matter of days or a couple weeks? What was it? What was the typical scenario though?
If it was going to happen, if it was a good trade, it would tend to happen within a week or two.
Okay.
Often, sometimes within a day or two.
So you said you had your stops. What kind of stops were put in place? What kind of mechanics were you guys told about it? Was it a percentage allotment that you were looking to stop out on immediately?
Well, we would basically determine our position sizes based on the volatility. So we would set our position size to say our trade size would be where 1% equals one average true range. So we would look at how much one average true range was in terms of dollars, divide that by the account size, and that would tell us how many contracts to trade.
And did you personally, were you trading with stops or mental stops?
I personally only used mental stops because I had a really large account, and if I had I was worried that if I gave the stops out, people would know about them somehow.
Right. Okay.
Some of the markets you could trust the brokers. We essentially ran our own brokers.
Right.
But some of the markets we didn't have our own brokers, so I just kept mental stops the whole time. That way.
So you had a little distrust in the markets after a short period of time. Were you given leeway to let positions run against you more than maybe the rules had stated?
I mean, we were given leeway to do whatever we wanted, but that wasn't considered a good thing to do. So,
right. I mean, let's say whatever that number was, as you said, based on the average true range percentage of it. If you went home and it had a position against you and hadn't done anything, would you get flack from Richard and William?
In the beginning, we certainly would have. I never did that, so I can't really tell you what they would have done under that circumstance.
Were other traders doing that?
I think a little bit in the beginning, here and there. I mean, I certainly knew of a few cases, but those traders tended not to be around after a couple of years.
Okay, so you started with 23. Were you rotating in new traders, or was it the group was kind of weaned down to a smaller number as time went on?
Well, we actually started with 12, I think 12 or 13 the first year. A couple of those were friends of Rich, and then we had another group that came in the second year that I didn't know quite as well because I didn't go through the group with them and I didn't trade in the office with them.
Okay, so how long, 83 until how long were you doing the Turtle program? How long were you under their tutelage?
That lasted through 88, about March or April of 88.
March or April of 88? So about 5 years, 4.5, 5 years, somewhere in there?
Yeah, just a little over 4 years.
And so what was your success with the program? How did, at the end, how were you able to come out of that?
My average returns were over 100% a year for the period that I traded.
Any negative years with them?
My last year, I was down maybe 6 or 7%, if I recall. But it ended real early.
Okay.
The year before that, I was down maybe 2 or 3%. But the 3 previous years were up in some cases over 250%.